Okay, so today we're diving into what you could only call a blockbuster quarter from the healthcare giant Cardinal Health. They've kicked off their fiscal year with results that aren't just good, they're a huge signal that a major strategy of theirs is seriously paying off. So let's break down exactly how they pulled it off. Right out of the gate, let's talk about the number that made everyone sit up and pay attention. A 36% year-over-year leap in earnings per share. Now, for a company of this scale, that kind of growth is just phenomenal. It's a massive flag telling us something fundamental is shifting inside the business. And you can bet the leadership team is feeling pretty good about it. The CEO, Jason Holler, basically said this wasn't just a fluke. When he uses words like strong and broad-based, he's telling us the success is happening across the entire company, and it's setting a really powerful tone for the rest of the year. And look, this growth story is solid across the board. Revenue shot up 22% to a staggering $64 billion. Then you look at their core profitability. Operating earnings jumped an even more impressive 37%. And all of that just flows right down to that 36% pop in earnings per share we started with. It's pretty clear this is a company firing on all cylinders. So the million-dollar question, right? Where is all this incredible growth actually coming from? Let's peel back the layers of the business and see which engines are really driving this thing forward. Well, no surprise here, the biggest piece of their business made the biggest splash. The Pharmaceutical and Specialty Solutions segment, which is really the core of Cardinal Health, grew by an unbelievable 23%. I mean, this division alone brought in over $59 billion in just one quarter, mostly thanks to really strong sales of brand name and specialty drugs. And if we peek under the hood of that pharma segment's profit, a few key things really stand out. First up, you've got those super strong sales of high-value specialty products. Second, there's a big contribution coming from their managed service organization platforms, or MSOs. We'll talk more about those in a minute. And third, their generics program just had a really solid performance. It's a picture of really well-rounded success. Okay, now let's switch gears to their other big segment, global medical products and distribution. Now, when you first see that 2% revenue increase, you might think, not exactly setting the world on fire compared to the pharma numbers. But hold on, because the real story here isn't about revenue at all. Yeah, the revenue growth was kind of tame, but check this out. The profit, it absolutely exploded. We're talking about a jump from just $8 million a year ago to $46 million this quarter. That's not just a little bump. That's a sign of a massive turnaround. It shows they're becoming way more efficient, probably managing their supply chain better and focusing on products that actually make them more money. And hey, we can't forget about the other category. This is a collection of smaller but really powerful business units, like their at-home solutions and their nuclear medicine division. And together, they posted a combined revenue jump of 38%. This is important because it proves the growth is truly happening everywhere, not just concentrated in one or two spots. That gives them some really valuable diversification. You know, numbers like these don't just fall out of the sky. They're the result of a very deliberate, very focused strategy. So now we get to the why behind all these results, and it really boils down to one thing: a huge bet on specialty healthcare. Okay, so I've thrown around this term MSO a couple of times. What the heck is it? Well, the easiest way to think about it is like this. An MSO is the ultimate all-star business crew for a doctor's office. They handle all the complicated stuff like dealing with insurance billing, managing the tech, handling purchasing, so the doctors can forget all that and just focus on what they do best: treating patients. And this is where Cardinal Health is placing its chips. They're going all in on this MSO model through a platform they call the Specialty Alliance. This is basically their vehicle for partnering up with and supporting community-based doctors in these really high-value specialty areas, like urology. And if you want a perfect, real-world example of this strategy in action, look no further. Cardinal just announced they're buying Solaris Health for almost $2 billion. And this isn't just any company. Solaris is the #1 urology MSO in the entire country. This is a massive strategic move. So what's the big deal with this deal? What does it actually do for them? Well, for starters, it basically crowns them the king of the very lucrative urology space. It also gives them instant, massive scale and access to new markets, like overnight. And crucially, it expands their total physician network to nearly 3,000 doctors. This one move just hit the fast-forward button on their entire specialty care strategy. You know, a quarter this strong isn't just a look in the rearview mirror. It totally changes the map for the road ahead. So let's see what all this incredible performance means for Cardinal Health's forecast for the rest of the year. So it's no shocker, right? After a quarter like that, they're feeling really optimistic. The company has officially raised its financial guidance for the full year, taking into account both these powerful Q1 results and what they expect to get from the big Solaris Health acquisition. Their earnings per share forecast, it's getting a really nice bump, now expected to land somewhere between 965 and 985. But what really tells the story for me is the cash flow projection. They're now expecting to generate between $3 and $3.5 billion in free cash. That is a ton of capital they can use to reinvest back into the business. And you can really see the story right here in this chart. Look at the climb. You see last year's actual results, then you see their original forecast, and now you see this new higher target. It's just a really powerful visual of how their momentum is accelerating. Okay, so let's put a bow on all of this. What's the core story Cardinal Health is telling everyone right now? It's that they have a really resilient, diverse business. They are laser-focused on high-growth, high-margin areas like specialty care. That big turnaround in their medical segment, it's working. They're generating more and more cash, and they have a very clear, very disciplined plan for how to use it. And so, all of this leads us with one big question, doesn't it? This quarter was an undeniable win, and it was driven by a really bold strategy in specialty care. The numbers don't lie. The challenge now, of course, is execution. Can Cardinal Health keep this powerful engine roaring quarter after quarter? That is what everyone is going to be watching.